So picture the situation. You found a perfect home with your realtor and now you're ready to write an offer. Unless you or your realtor suspect this home will have multiple offers, there's a good chance that you can sit down, take a little bit of time, and maybe try to negotiate with the seller. But what exactly can you negotiate in a contract? There's a bunch of small things, sure, but the one thing that matters most is price. But it's way more nuanced than that, and there's some fundamental mathematical principles at play here that can help keep more money in your pocket. But most people don't understand, so stay tuned to learn the secrets. Hey, what's up guys? It's Shawn, your Charleston realtor. Today we're gonna talk about a question I get asked all the time, and I'm constantly advising my clients one way or the other. That is, in real estate negotiations as a buyer, do I wanna ask for a lower purchase price, or do I want to ask the seller for concessions, or some mixture of both? Now, before I give the answer, and there is a right answer by the way, let's briefly go over what purchase price and seller concessions are. Purchase price is just what it sounds like. This is the amount you'll buy the home for, and it can be negotiated. This means that if you negotiate a lower purchase price, then your total loan amount will be smaller, which in turn means your monthly payment will be fractionally lower. So as a rule of thumb, every $20,000 financed on a 30-year fixed rate mortgage at 5% interest rate results roughly into a monthly payment that is $100 higher. We'll use this rule of thumb later in the video. Now, seller concessions, on the other hand, are a little more complicated. These are contributions from the seller in a real estate transaction towards buyer closing costs. Buying a home isn't free. There's tons of fees associated with the transaction outside of the down payment. These fees could include attorney fees, title search and insurance fees, HOA transfer fees, loan origination fees, loan discount points or temporary buy downs, loan processing fees, various lender fees, deed recording fees, prorated interest and taxes, escrow padding, and your insurance premium. All of this can add up to something substantial, sometimes as much as 5% of the total purchase price, though in reality it's usually about 3%. It just depends on the purchase price. So what a seller concession is a seller coming in and saying that they'll contribute a certain amount of money towards your closing costs so you don't have to come out of pocket as much. Certain loan products have different allowable concessions, so be sure you talk to your lender about how much concessions you're actually allowed to have. This publicly available chart breaks down each loan and the allowable concession. The reason why there are caps for seller concessions is that regulatory bodies such as HUD or Fannie Mae or Freddie Mac want to limit inflation of housing prices. So for instance, if you're using a VA loan, you're capped at 4% and an FHA is 6%. A conventional loan for a primary residence depends on your down payment, and a conventional loan for an investment property is capped at 2%. Also, a question I get asked sometimes is, can you use seller concessions to cover your down payment? The answer is no, you cannot, and that's where the story ends. Now that we've gone over purchase price and seller concessions, let's go back to our original question. What is better? And here's the answer to the question. Seller concessions. Every single time. And I see 3 reasons why this is so. I'm also not going to say the obvious stuff like, as a buyer you get to keep more money in your pocket, or you have to bring less money to the closing. That's apparent to anyone, and it's not the point of this video. First, if you don't mind, consider giving this video a thumbs up and hit the subscribe button. As a new content creator, this really helps me out. So the first reason, and probably the most important reason, is this concept called the present value of money. When I was attending business school, this was harped on again and again, because it's one of the most important concepts in all of finance. It's a little convoluted, but I'll try to break it down into basic terms without getting math heavy. We can define the present value of money as the idea that money today is worth more than the same amount in the future. Or in other words, money received in the future is not worth as much as an equal amount received today. In the context of buying a home, seller concessions are essentially receiving money today. Cash that would have otherwise left your bank account for closing costs now remains in your bank. So let's take this home for example. You can either buy it for $340,000 or you can buy it for $350,000 and get $10,000 in seller concessions. Let's assume you own it for 13 years, which is the average length of home ownership in the United States. Obviously, if you anticipate selling it before 13 years, then it makes the numbers even more skewed in favor of concessions. And here's why. So remember that thumb rule I mentioned earlier? The $20,000 of loan amount will translate into roughly $100 in your monthly payment at a 5% interest rate. Well, in this case, the difference between our example translates roughly into $50 per month. Over the course of 13 years, that is $7,800 of interest saved if you didn't choose seller concessions. $7,800 is less than $10,000. So if you held onto the home for 13 years, which statistically there's only a 50% chance you will, you still wouldn't recoup the full $10,000 in closing costs. But interest saved is not the point of the present value of money. The point is the opportunity cost that the cash today provides compared with some indeterminate day in the future. So let's assume that you could use that money to achieve an 8% annualized return in the stock market or literally any other investment. Over the course of 13 years, that is $27,000. Think about it. $10,000 that you would have not otherwise had will yield $27,000 in 13 years if you invested it wisely. That would far outpace any interest savings. But wait, what about when you go to sell the home? You're getting that $10,000 back then, right? Actually, yes, you do get that $10,000 back at closing when you sell the home in the future if you chose the purchase price reduction instead of seller concessions 13 years earlier. But assuming an inflation rate of 3%, that future $10,000 is actually only worth $6,800 today, because inflation makes your money worth less. On top of that, the interest you saved over the 13 years actually isn't worth the full $7,800 in today's money. It's actually worth less, but the math gets a little complicated. So this is the crux of the present value of money. Any money you receive in the future will be worth less than the money you receive today. And if you were to invest that money from concessions instead, then all bets are off, and you're setting future you up for success. This example only skims over some of the fundamental principles of the present value of money. Many accountants and financial advisors can spend hours discussing this, complete with Excel spreadsheets and math formulas. I'm not going to spend a video about seller concessions discussing net present value or discount rates, but understand that this is a very real field of math and is very applicable in real estate negotiations. So the second advantage of seller concessions over purchase price reduction is you're helping neighborhood comparables, which will anchor your home value. Without going into too much detail, residential homes in the United States are almost always appraised using the comparable sales approach. This means after you buy your home, appraisers will use your home as a baseline to compare future sales in your neighborhood. Your home being sold for more will justify other homes in that neighborhood being sold for more, which in turn will justify other homes in that neighborhood being sold for more, which in turn will elevate the value of your home. This can snowball, and it's really how some neighborhoods appreciate faster than others. It all starts with a few folks wanting to buy a home for a little bit more. Now with this, I have to point out one disadvantage to this strategy. You are not necessarily guaranteeing that the home will appraise for the purchase price, especially if you're buying the most expensive home ever to be sold in the neighborhood. This risk is amplified if you have a ton of seller concessions written into your contract instead of purchase price reduction. And it's even more amplified if the seller overpriced the home to begin with. There's a chance that the home won't appraise for the purchase price, and as a result, the seller will start asking to remove the seller concessions so they net a similar number. Also, another caveat is that if you buy a home for more, then there's a 110% chance that the county will tax you at a higher rate. We can't escape the tax man, not ever, but in this case, we're only talking dollars or tens of dollars of difference on a monthly basis. Now, the third advantage to seller concessions is only specific to VA loans, but many of my clients are VA buyers, so I feel like this is applicable. Did you know that you can use seller concessions in a VA loan to pay off debt or judgments? Like, you can pay credit card debt or auto loans with seller concessions with a VA loan, but with some caveats. Disclaimer, I'm not a loan originator, so you need to run this by your loan officer for your specific situation. But this is a kind of a hidden advantage of the VA loan that most realtors and many lenders don't know about. Also, and this is mostly as a side note, if you're using a VA loan, make sure your lender is intimately familiar with them. The best analogy I've ever heard about this is, say you play golf once a year. Are you any good? Definitely not. But do you understand the basics? Sure. But your swing's gonna be terrible, and the majority of the time you'll be chasing your balls in the woods. Now, if you played golf several times a week, you're going to be a lot better. The same is true with lenders. Any lender can originate a VA loan, but most only do a handful a year, if that. So ensure your lender primarily does VA loans in order to make the most of your seller concessions. Real quick, we're gonna touch on when seller concessions are not useful. So if you're buying a home with cash, then seller concessions or purchase price reduction doesn't necessarily matter. It's all the same since you realize those savings immediately. Also, it's possible to have too much in seller concessions. Sometimes your entire closing costs are paid for through seller concessions and you have an excess. Now, you can use those excess concessions to pay down the interest rate, but sometimes that isn't worth it either, and it's a conversation to have with your lender. In South Carolina, any excess concessions go back to the seller, so it's incumbent on your realtor to go back to the seller and renegotiate those seller concessions to lower the purchase price a little bit. Or maybe your lender can pad your escrow account. It's uncommon, but it's possible. And lastly, let's talk about why a seller might not like seller concessions. A common misconception is that the seller concessions and purchase price reduction are the same for a seller, but that's not actually true. A seller will have to pay the realtor commissions based on the purchase price. So if the seller is paying a 6% commission, then the difference between a $10,000 purchase price reduction and a $10,000 seller concession is that the seller will have to net $600 less. Also, consider that a seller who doesn't understand the topics we discussed in this video might see an offer that contains seller concessions and immediately think that the buyer isn't as qualified since they need so much in closing cost assistance, thereby making their offer more risky or less desirable. And at that point, it's important for the buyer's realtor to dissuade those thoughts. So those are my thoughts on why seller concessions win every time over purchase price reduction as a buyer. If you guys like this video, be sure to let me know in the comments. As always, my contact information is down below. Feel free to send me an email or text if you have any questions, and I'll see you in the next video.